Hey, I hope you and your families are doing well. In recent weeks, I filmed a couple of YouTube videos on one of my favorite swing trading setups that I call the shakeout demand tail. So in this video, I'm going to take you through two of my current open positions in SMR and UPSD that I targeted the shakeout demand tail off the 21-day EMA. You can see that one of my members here is up 33% in the first couple of weeks of October, targeting these type of setups. So this is what I want to teach you by the end of the video. These shakeout demand tails, where to be looking for them, and also how to screen for them. So I really hope you guys are going to get a lot out of this video. Market Surge are today's video sponsor. They're my go-to resource for analyzing company fundamentals. If you're interested in a discounted trial, then you'll find a link to that in the comment section and the description below. So I'm going to take you through two of my current open positions in SMR and UPSD. Now there's four parts to every single trade, whether you're a scalper, a day trader, a swing trader, or a position trader. Those four parts of every single trade are: number one, how do you identify a high quality setup? Number two is how do you control the risk to create an asymmetric risk versus reward trading opportunity? Number three is how do you mitigate the risk? And then number four is what are the selling rules and selling guidelines that you are using to optimize profits? Now this video is going to focus specifically on the first part, how do you identify the setup, and part number two, how do you control the risk? So that is what we're going to be talking about a lot. So in recent weeks, I filmed a couple of videos on what I call a shakeout demand tail. Now a shakeout demand tail, I put that as an umbrella of hammer candlesticks, doji dragonflies, and takuri lines that you can see on the screen currently. So what I'm looking for is the true market leaders. They are the O'Neill, CanSlim type stocks, big earnings, big sales, big estimates, big growth ahead of them. I'm looking for those kind of stocks, or I'm looking for the momentum leader type stocks, the stocks that have high 20-day ADR percentages, are nice and liquid, and can go on powerful moves in the right environment. So those are the two main type of stocks that I'm looking for. Ideally, they are also in a very strong group or very strong theme of the market as well. We'll come onto the screening of these stocks in a little bit. It's nice and simple. It's really simple. It's not that difficult. So what I'm looking for is those hammers, those doji dragonflies, and takuri lines to form in your TMLs, so your true market leaders, or your momentum leaders, and a real sweet spot moving average is going to be this blue line. Now what is that blue line? That is the 21-day EMA. So the 21-day EMA, this electric blue line, that is where I'm really looking for, really dialed in and paying attention to when these TMLs or momentum leader type stocks form these shakeout demand tails. So remember, those shakeout demand tails, that's the umbrella of hammer candlesticks, doji dragonflies, and takuri lines. So the 21-day EMA can be a real sweet spot for where I'm looking for them. Other regions where you can get them as well will be the black line being the 10-day EMA, potentially the purple line being the 50-day simple period moving average. This is kind of a shakeout demand tail, but a little bit wide, that one. Here's another one coming through in here. But really the 21-day EMA, I think, is the sweet spot for a lot of those TMLs and momentum leaders when they're showing a lot of relative strength in the market. So when you have identified the shakeout demand tail that's forming on the 21-day EMA, quite simply, I like to use primarily buy stop limit orders. So what I'm doing is I'm targeting it through the high of the shakeout demand tail, and my stop loss is usually 1 cent underneath the low of that candlestick. Now something that is then useful to use as a metric to gauge risk against is the stock's 20-day ADR percentage. So what you can see here with SMR, the current 20-day ADR percentage is 13.02%. That means the average daily range percentage of the stock, excluding gaps, is 13.02%. Now if you keep in your head that the average for the triple Qs and the S&P 500 is around 1%. The triple Qs is a little bit quicker than the S&P 500, usually about 1.25%, whereas the S&P 500 is usually a little bit less than 1%. But if you keep in your head that the average for the US major indexes, the Qs and the SPYs, is 1%, SMR is 13 times quicker than the major indexes. This is how you get mega leverage coming through when these stocks set up, because the triple Qs is very unlikely in the space of 1, 2, 3, 4, 5 sessions to go up 61%. It may happen, but it's very improbable, right? Whereas this stock with an ADR of 13%, that's pretty probable. Like, those type of stocks can do it. You can go and analyze the previous behavior as well. So when you're looking for certain stocks, be aware of the 20-day ADR percentage. If you're trading stocks where the 20-day ADR percentage is like 1%, 1.25%, 1.5%, it's a slow stock. Okay, it's not going to go up much more than the major indexes. If we take a look at UPSD over the course of around about 2 weeks or so, this stock here has been able to go up 46%. Now, it has a 20-day ADR percentage currently of 7.39%. That's pretty reasonable for a stock with a ADR of over 7% to go up 45% in the right market environment. Okay, the triple Qs is probably not going to go up 46% in the space of a week and a half, 2 weeks, but stocks with 13% ADRs, 7% ADRs, 6%, 5% ADRs, they can make the moves like this. So that is why you want to be aware of your TMLs, your true market leaders like your Nvidias of the world, but you also want to be aware of the momentum leader type stocks that are potentially in a really strong theme, a really strong area of the market. Right now, there's a lot of talk about clean alternative energy related stocks, and specifically nuclear as well, and small modular nuclear reactors, try and say that 10 times quickly, such as SMR. Okay, small modular nuclear reactors, SMR, it literally has the ticker there. Okay, you've seen recent news coming out of Microsoft going nuclear in terms of looking for nuclear energy, Google as well, Amazon as well, most recently. So these stocks here are really, really kind of in play. They're a really strong theme in the market. So not only is it a momentum leader, it's in a really strong theme of the market, and it's setting up in a textbook manner. So these are the setups. If you haven't watched the last kind of 2 weeks of YouTube videos where I'm talking about shakeout demand tails, I think it's really worth doing that. I'll link them in the comment section below this video, so you can go and say, okay, that's a shakeout, that's a shakeout. But here you can see it in practice. Okay, so it's not that difficult to kind of find these and identify these. Like 99% of it is just pattern recognition. So how can you actually screen for these type of shakeout demand tails? It's pretty simple. It ain't rocket science. If you look at these, so what is the point of screening? Let's just reverse engineer the outcome. All right, what are you looking for? Well, you're looking for these type of setups, right? I like shakeout demand tails in leading stocks, TMLs, momentum leaders around their 21-day EMA. Okay, so what am I going to do with my screening inputs? Well, what I want to do is efficiently try and find these type of setups like SMR, like UPST. I want to find SMR and UPST when they're right here, and they're forming those shakeout demand tails on 21-day EMAs. So if you know the type of setup that you're looking for, you can just reverse engineer the screening criteria that you want to put into it to find these setups. It's really, really straightforward, right? So if you look at them, is SMR and UPST above their 200-day simple period moving average in both cases? Yes. The red line there on my charts, that's the 200-day. Here, the red line down here is the 200-day. They're both above it. The purple line is the 50-day simple period moving average. Are they both above their 50 when the stock is setting up? Yeah. You can see UPST above its 50 and SMR above its 50. And this is what I tend to find the better examples of this, where you get the most powerful stocks in the market that are the momentum leader type stocks, the TMLs. They tend to set up these shakeout demand tails above their 200-day simple period moving average and above their 50-day. So why do I want to look at anything below their 200-day or 50-day simple period moving average? It would be completely inefficient if these are the type of setups I'm trying to find. So guess what? The screening criteria is I want price to be above the 200 and above the 50-day simple period moving average. Nice and simple. Anything below that, I ain't interested. I don't want to look at it. Now what we can do is the 50-day average dollar volume, because you want the stock to have some liquidity. You want other market operators, other traders to be in there as well. If the stock is illiquid and the spreads are really funky and wide, like it's just not going to be on the type of market operators' radars who you want in there in the trade with you. You need the liquidity there. Okay, the liquidity is going to bring the type of market operators that you want there. The best traders in the market, we are not going to be trading the really thin stocks where the spreads are like 1%, 3%. We're just not going to touch them. Just not going to touch them. Focus on the more liquid stocks in the market meeting this criteria. So I want the 50-day average dollar volume to be above 25 million. Just as a basic. Now, the better ones will often have a higher 50-day average dollar volume, but that's a threshold. The better ones may have 50 million, 100 million, 250 million, north of 500 million in some cases. Okay, but 25 million just removes the illiquid stocks. I don't even want to look at it. I want to look at the creme de la creme. Okay, what do you also notice? This is the 20-day average daily range percentage of the stock. I want it to be greater than 4%. Okay, because what do you see here? Now, this has increased a little bit given the recent moves, but what do you see? SMR, well, it's way above 4%. UPST, it's way above 4%. So if I'm specifically screening for the momentum leaders that are setting up like this, okay, shakeout demand tails around 10-day EMAs, but preferably 21-day EMAs, then this is what I want to be looking for. It's nice and simple. So now let me take you across to my custom built stock screener, which we call Stock Screen Hero, right? So I've got a couple of preset screens in here. Okay, you've got an uptrend wide and uptrend narrow, but I'm going to show you the momentum leader wide. So all we do is click this, right? It's really simple. It's not rocket science. People make this so freaking complicated. It doesn't need to be complicated. Okay, so I'm going to run through this. Okay, so price greater than the 50-day moving average. I want price above the 50-day, as we just spoke. I want price above the 200-day. Okay, then we go over here. I want the 50-day average dollar volume to be greater than 25 million, and I want the 20-day ADR percentage of the stock to be greater than 4%. Really, really simple. Now I'm just going to look at these in terms of market capitalization. So I want the largest market cap first. If I wanted to change this, look at the quickest stocks first in terms of 20-day, I can do that. I can look at the most liquid stocks on a 50-day average dollar volume, whatever you want to do, right? But let me just scroll through these. So like PLTR, I got a position in this one's pulling into the black line being the 10-day EMA. And then you can just scroll through. It's nice and easy. And then it's not about having a magic screen where you're just like, it's a magic screen. I type in this criteria and it just gives me one result and it's just a perfect shakeout demand tail on the 21-day EMA. It does not work like that. Okay, this is HOOD. I actually targeted HOOD right here. Through the high of this bar here, there's more of a gap down reverse bar. I teach you on the 10-day EMA right here. But now look, it could pull back to the 10-day. I'd rather see it pull back to the 21-day EMA. Micro strategy. I'd rather see this pull back to the 21-day EMA. Potential for a nice big base building in there as well. So it's not about having a magic screen. It's not a magic pill. You have to do the hard yards. You have to actually look at charts and kind of stalk the stocks and watch them move into position. Okay, watch them move into position. Have them on your radar. Study them each day. Okay, you're getting closer. You're moving into position where you may want to see it. If you look at SoFi here as well, so SoFi Technologies, look at that, shakeout demand tail also looks to be an inside bar on the 10 and 21-day EMA. Here's one off the 50 as well. Look at that shakeout demand tail right there off the 50-day. They are absolutely timeless. You just see them keep happening and happening and happening. So this is it. I will then just screen through them. A lot of leading stocks right now are a little bit extended, as you can see with SMR, the UPSTs of the world. So now it's just watching and waiting for them to pull back, preferably towards 21-day EMAs, see if they form shakeout demand tails, and that is where I will then be looking for them. If we go with ASTS, which is now starting to base quite constructively around all these key moving averages, maybe a big base building there. But if I just scroll in here, what do you notice? Shakeout demand tail off the 10, shakeout demand tail, shakeout demand tail, shakeout demand tail, shakeout demand tail, shakeout this bar here, trigger bar S is what I also teach. Shakeout demand tail slash a little tight trigger bar, and then up and away it goes. So this one here is one to be watching as well. But there you go. It's super simple. Like, it's really not that complicated. I don't think. I think things can be made very complicated, but simplicity is often best. I really hope you guys have enjoyed that video. That'll probably be it for the 3-part series now on shakeout demand tails. I may start talking about something else a little bit different in these YouTube videos now, but shakeout demand tails, I absolutely love them. They are one of my favorite setups to be trading. So thank you very much for watching. Thank you very much for supporting the channel. I look forward to seeing you in a future video.